We are standing outside Bombay Stock Exchange, oldest stock exchange in Asia, which has seen many booms and many busts. But one thing has remained really common is the ability for Indian capital market to really stand tall. So what makes Indian stock market so unique? And given that we are in a vibrant bull market, what is the way forward for Indian stock market? And to really take that forward, it's my honor and my pleasure to bring on board someone who everyone loves. I have learned from, he's an original thinker and his word is always his bond, and I can vouch for it because every time we've requested him for time, well, he's always respected that despite his busy schedule. Thank you so very much for joining us.
Welcome, Nikunj. Welcome to the BSE, and thank you so much for having me on your new show.
Thank you very much. What's the first thing that comes to your mind? I mean, I can see your expressions are like a child in a candy store when I talk about BSE.
You know, Nikunj, it's such a historic area that actually gives me goosebumps to come here. If you just stand, this is like the epicenter of the Indian financial system. If you just stand here, you look north, you have SBI and RBI. You look east, westward, you have the House of Tatas, the House of Godrej is there. You go eastwards, you have the Indian hotels and the fabulous Colaba. You go back Bay Reclamations, where Hindustan Lever has its office, HDFC has its office. So we're right at the center of the financial revolution that's taken place in India. When I came in 87, 88, India was a backwater. The last street was the backwater in global financial markets. Today we are the third largest economy, headed towards the third largest economy, and the place to be. All eyes are on the last street. So it's been a lovely journey, and thank you so much for showcasing it.
So we look here, there is SBI, we look there is the House of Tatas, but if I look up, there is the House of Damani, your office is there.
Thank you, that is my old office, I did share it. And I must remind you, Nikunj, that too many people say that, you know, the village is your globe, but Paris is my hometown, to imitate Gertrude Stein. But the same way, I mean, I might have traveled the village, but Bombay is our hometown. And this building, this iconic BSE 25-story building, is the Eiffel Tower for investors, because everyone who's come to make your money, from Dhirubhai Ambani to Narayan Murthy, you know, the streets maybe look like they're paved with asphalt, but actually they're paved with gold. And the rise of the Sensex perhaps redoubles my effort to say that, because when I came, the Sensex was maybe 1,000, below 1,000. It's now closer to 75,000.
The intraday swings are 1,000.
Intraday swings 1,000. I mean, extraordinary journey. Some of the big corporations have gone from a few thousand crores to a couple of lakhs. And it all started in 91 day when Manmohan Singh presented his dream budget to Parliament, and that broke the ethos of static, regulated, slow growth economy to fast growth modern economy. So it's been an extraordinary journey for the last 30 years.
What makes Indian stock market so unique and so resilient?
Well, I think, let me tell you a bit of history which people may not remember. My father was in the stock market, and he's lived through very painful times, the Dividend Control Act, the China war, when the markets were closed and there was no foreign investment coming into India. So they were non-existent out there. Then in 1977, the winds of change swept India. The Congress government was thrown out and a new Janta government came into power. And the industry minister used to be an old socialist called Mr. George Fernandes. And here where we learned the law of unintended consequences. Because what George Fernandes did was he told the MNCs in India at that time that either you dilute your shareholding below 40% or you get out and leave the country. So companies like IBM and Coke left India because they didn't want to dilute their shareholding. But companies like Colgate, Nestle, Hindustan Lever stayed on in India and gave shares to the public. And as history will record, these shares have gone on to become multi-baggers, 100x, 1000x, 2000x over a period of time. But they also gave India a good corporate governance. People understood how good companies behave, how good companies are managed. So we were 20, 30 years ahead of China in good corporate governance. And that is now reflecting in the markets because we have such a nice group of globally. While China, even the best companies are now trading at 20, 30-year lows. So I think that the law of unintended consequences took place because you had Mr. Fernandes throwing the companies out because he didn't like foreign capitalists. But that, in fact, led to better corporate governance and a better pool of investable companies for India.
Mr. Damani, the financial market economy right now, which is the market cap of Indian companies, is actually higher than the real economy. And that is a clear indication of the migration of economy, like Amrit Kal for financial investors. Why is that happening?
Well, you know, I'm not sure there's any particular reason, but, you know, we are going through a bull market. As Homik Haras points out in his new book about the global middle class, he says the global middle class started with, you know, a few 100 million people in Victorian England. And now I think by 2030 there'll be 5 billion people in the middle class. And I think the next billion people are more likely to come from India than China in the middle class. So the middle class demands financialization of savings, better education, action on climate change, so many things. So it's the middle class bull market that is leading it. And every bull market has its own thesis. For example, you recall when we first met in 2000, there was a big bull market in TMT stocks. It was presaging the age of the internet and presaging the age of zero communication costs. And you know what happened to those stocks at that time? And after that time, the bad ones got weeded out, the good ones continued to perform. I think what we're experiencing now, perhaps, is this great middle class revolution. I think this bull market we call the middle class bull market in India. I think that will create prosperity, wealth of a dimension that we're not yet familiar with. Another big city which is as buzzing and as exciting as Bombay happens to be Tokyo. And if you remember in 1964, India won the Olympic gold medal in the Tokyo Olympics. But that time Japan was a beaten third world country. Over the next 30 years, the Nikkei went from 1,000 to 40,000. Companies that were not well known outside like Sony, Honda, Hitachi have now become well known companies. So the India bulls, which include me by the way, Nikunj, believes that India is on a similar trajectory. That over the next 25 years, as Japan went from a third world country to a first world country, Indian economy will go from a third world country to perhaps the third largest. So we are very hopeful.
We are using the word Amrit Kal. The meaning of Amrit Kal is something which is long and something which is for eternity. Do you think India's indeed Amrit Kal has started, and especially for financial investors?
I think it has, because it's hard to, I think the Sensex moved at 15-16% compounded. The last few years probably better than that, with dividends about 18%. It's an extraordinary return, even if it's in rupees and not in dollars. It's an extraordinary return. And there have been very fair and just tax policies, the government. And more importantly, I think this bull market, you have to give a lot of kudos to the Prime Minister's office, the Prime Minister and DIPAM for the way they've handled the biggest investment in Indian taxpayers have made, which is in the public sector stocks. By introducing better corporate governance, by stopping leakages, they've really extracted value from these companies, which was sad and forgotten in the Indian stock market. So I think we owe a lot of credit to the government for its forward-looking policies on that matter. So having said that, if these companies can start delivering a market rate of return, Amrit Kal should not be too far behind.
So since we are talking about Mumbai, and the last train station is in Mumbai is Churchgate. First train station.
Yes.
I mean, from people coming from there actually. But yeah, the first train station, if you live in South Bombay, is actually Churchgate, and it goes all the way to Kandivali and beyond. So if the Indian bull market is a train journey, starting from Churchgate to suburbs of Bombay, where do you think this train journey has reached?
It's a very interesting question. A lot of people think, for example, that we're in a bubble sort of atmosphere. I don't think we're in a bubble. All bull markets end, Nikunj. That is the tough news. No bull market rise permanently. Even this bull market will end. But having said that, we are not seeing any indications right now of the bull market ending. I'll give you an example earlier when I said the Japanese bull market went up 40x in yen terms and 100x in terms of dollar terms. So bull markets can go on for a long time, and they change the complexion of the country. And I believe you're in such a bull market. I think when we get closer to the top, there will be flashing signals of red. I don't see that right now, so
what
I'm going to enjoy
signals?
it. Signals are, when the way market reacts to news, it won't react to good news, it'll react to bad news. There'll be extreme amount of leverage, extreme amount of IPOs coming to the market, a lot of idiotic talk going on at Dalal Street. What we are having now is more of a rolling sector-wise correction. So markets gets overheated in large caps, it will correct. Markets overheated in some other stocks, it will correct. But the underlying tone is good because liquidity is good, domestic money is good out there. Market still reacting positively to the announcement, and market very hopeful that the election outcome will be a market-friendly outcome.
The whole purpose of a stock market was to provide capital. Companies like Infosys, they've come and they've tapped capital from here. But today the innovative companies are not coming to stock market. They are coming to stock market after they reach a size. So do you think the role of stock market going forward could diminish?
I don't know, I've heard that, but I'm not really sure. I hope not. It's been a great place, and our trading systems are now the best in the world. We do T+1, we might go to T+0. It's extraordinary the amount of risk and volatility we have subdued. In 90s when I used to walk the street of Dalal Street, you'd always fear there'd be a default coming and the markets would be closed and deliveries wouldn't happen on time. I think that fear has been completely removed by the forward-looking regulations of the Securities and Exchange Board of India. So we're deeply grateful to that. So I think the stock exchange will remain a capitalistic outpost, and this will be our Eiffel Tower.
To really look at a very simple way of how Ramesh Damani invests, you've always said that, look, I'm not going to give you a fish to eat, I will tell you how to catch a fish. So no tips, no advice, but the framework. Share your framework with us. You always say buy something which is cheap, buy something which is long term. How does it work?
You know, when we were young, we used to play the game of passing the pillow. And I think a lot of people who come to Dalal Street, the new ones and the younger investors and the more ones who are excitable, tend to pass the pillow. They buy something at 80, it goes to 85, they sell it and they're very happy. They go out, have a drink, celebrate, whatever. But the true winner in this game is the one who holds the pillow at the end when the music stops. And that music is not going to stop for a while. So you invest in great companies and give them a chance to grow. I've seen so many companies, Nikunj, that seem to have peaked out, then they correct maybe 30%, 35% after time, then they come back and make new highs. You know, good examples are companies like ITC, for example, or Lever or Reliance, which have conquered many a bull market and gone on to new highs. I think there are extraordinary amount of companies available in India with good corporate governance, good fundamentals, that will temporarily peak because of valuation go down. But the true winner making long-term wealth, and stock market is about making long-term generational wealth, will be the ones who hold on to that pillow to the end. I think, you know, you can imagine what a financial conglomerate in America is worth and what it's worth in India, what a tech company is worth in America and work in India. I think if you start doing those numbers, you tend to be more patient and hold. So my advice, to come back to your question, to all new investors coming, is that if you have to trade, but only trade with a portion of your money. The rest, invest in a great business and believe in that business, hold on to it. Think you're not buying a stock or a price movement, but a piece of the business, and you want to hold that business. And the true wealth is sometimes created there.
You've always said that the definition of a good business is that it should serve a purpose. It should solve a problem, it should be scalable, and it should be run by good guys. So which are some of the businesses you think are built to last business? One of the lovely books you've shared with me, Built to Last. Let's apply that in real life.
Yeah, I think clearly you want cash flow. And the way the capitalistic cycle works is that all business go bad after a period of time. You remember Eastman Kodak. The market for photography has exploded. Yet Kodak, which is the most well-recognized brand name in photography, has imploded. It's no longer even traded out there. They didn't see the change coming. So people who think of themselves very narrowly perhaps tend to get, defocused. So you don't think of yourself as being in the railroad business or the airline business, but in the transportation business. You don't think of yourself being in the movie business or the television business, but think of yourself as in the entertainment business. So you want to find businesses that have a broad application and have good cash flows to support the yield. And you buy them cheap. I think one of the big myths about this bull market that started was that a lot of people started espousing the theory that we only buy quality and we only buy quality at any price. That's a big myth out there because, everything has a price, especially the market is known to weigh a price for everything. So you obviously want to buy a great quality business, but when it's available at an attractive price. So the stock market is a great discounting mechanism. It discounts everything at a price. And if you find a bargain, you can get on and step onto it. So don't make that mistake of saying I only want, to give you an example, companies as the quality of Lever and Infosys did not give returns for 10 years to investors because if you bought them at the wrong price. So buy it at the good price. So a good business at a great price held will almost certainly make you money.
Why do stock markets follow a cycle? There was a time, which was a couple of years ago, quality at any price. It really worked. Now PSUs have made a comeback. There was a time when TMT did rather well. There was a time when real estate stocks were doing very well. Why does it happen?
It's the nature of the business. It's the nature of the beast, if you will. One thing I always try to explain to people is distinguish between risk and volatility. Risk is the chance of you permanently losing capital, and you can't afford to do that. Volatility is the nature of the beast. As you said, we were down 1,000 points the other day. It seems like a lot, 1,000 points. Oh my God, what's happening out here? And think of the other way around. If you had told me when COVID started, the next 4 years there'd be 2 wars going on globally. COVID would ravage all the continents. India would go through its own cycle of so many problems. You wouldn't have taken the bet that India would be 3x up. But the fact is the index is 3 up. So market rewards the patient investor, the good investor, and businesses find a way to be resilient and come back. And I think that's what they're doing. I think this is, of course, a multitude threads in this, but one of the threads, of course, is the great growth of the middle class that I told you, that is powering up. So I think Buffett often talks about what he called the ovarian lottery, that he was lucky that he was born to white parents in America. I think this generation of Indians should feel very lucky that we're at the right place at the right time.
So I have to take the clock really forward here. We're in 2024, let's say in 2040. Dalal Street would be there. I'm sure we'll be interacting with you. What kind of India do you envisage? Because with each cycle, the market cap construct of the market changes. What was blue chip, that's no longer the blue chip. What was blue chip in 1995 is no longer the blue chip of 2020. How do you see the construct of the market changing in next 10 years?
Well, it's very difficult. I mean, every bull market provides its leadership, like I said. So I told you, this bull markets, say with the public sector stocks, with the consumption theme, with the BPO people. We don't know what the next bull market, I cannot foresee what the next bull market would, but there's one thing I do believe, that the capitalist system translates or transmits between fear and greed, that people are going to be afraid to buy stocks and people are going to be rushing to buy stocks, okay? And when they're fearful, we want to be stepping up to the plate and buying and putting our capital to work, because at the end we have a deep belief in the abiding nature of capitalism in India. And when people are very hopeful and extraordinary jumping over to buy stocks, probably we'll book some profits out there. But I often say that the 3 Ds that are powering India are what I call democracy, demographics and digitization. India is a young country. While China is going to lose 400 million of its population by the year, next 20, 25 years, India is going to gain 400 million. That is equivalent of creating a US or Europe in India. So demographics, India is in a sweet spot, young country, age below 30. So demographics is almost destiny in economics, as they say. So that will happen. Democracy, I mean, America is still litigating the 2016 election, or some say even the 2000 election. Who won it? Was it Bush or was it Gore? Who won Florida? They don't know. And in India, we have elections, results come in 12 hours, people accept the results and we move on out of that. So I think democracy is enshrined in India. I think people are now seeing the advantage of that. When you go to a capitalistic system, you can have major companies like Alibaba, one day by the wrath of a bureaucrat, completely assigned to the dustbin. Whereas in India, the democracy is slower, but it's more jurisprudence going on out there. So that is always good out there. And so you put democracy, demographics, digitization. You know, when Neil Armstrong came to the moon and I was a young kid of 12 years old, he said this is a small step for man, but a huge leap for mankind. I think digitization is India's huge leap. What has happened is allows us to transform a chronically under infrastructure country to a well, beautiful infrastructure, because it relies on digital this thing. So whether it's UPI, Aadhaar, biometrics, and Nagpur, as you say. And that's an extraordinary revolution. They're getting good paid jobs. America just reported 3.5% unemployment rate. They don't have people at $20 an hour minimum wage. Here you can pay them $20 probably a day and probably less than that, and get a very high quality workforce. Cost of telecommunications zero, cost of office space is pretty attractive in India. So this business will boom in India. So I think the third leg of this three-legged stool, democracy, demographics and digitization, is what's propelling this long-term story out of India.
There's another D, the Damani effect.
You're too kind to me.
Tell us a story which you've not told anybody about Dalal Street, about your experience every time you would walk from here to your office.
You know, I think on a more somber note rather than a more exciting note, I think one of the hardest days was, I think in '93, when there was a bomb blast that ripped through BSE, and these were the streets. You know, you could walk through. A lot of my vendors that I knew and a few of the colleagues I knew were injured on that day. It was heartbreaking. But there's good and bad time to story. The good part is the resilience. The market didn't even close, it opened as soon as possible. I think Sharad Pawar was the chief minister and he made sure that the BSE opened. He realized the importance of the BSE as a resilient factor in that day. And the BSE, I don't even think took a break. They opened, I think it happened on a Friday, they opened on a Monday for regular trading hours amidst very high security, but they did open. But also this building was constructed by a company called Larsen, you know, and it withstood the impact because the institution created to withstand impacts, not only economics, but also in this case a bomb impact, you know. And the market, you know, the building survived, you know, everyone was safe in the ring. Imagine that bomb had pierced through the trading ring. The entire generation of Indian financial leaders would have had a 9/11 on their hands. You know, we all survived because of the construction of genius of some Indian companies. So we're truly grateful for that.
So when it comes to Mumbai, it's financial markets, it's Bollywood, it is food, and it is real estate. What else comes to your mind? Because you're a Mumbaikar.
I'll tell you about food though. I'll tell you a story which you said something nobody knows about here. We just walked down this lane a little bit. There's a Udupi restaurant called Purnima. And if rumors...
I went there in the morning actually, just a coincidence.
Yes. And if rumor has to be believed, well, Nikunj Dalmia eats there, Narayan Murthy is eaten there, and Nandan Nilekhi, when they came for the Infosys IPO.
Even Chandra from TCS is there now.
They used to come and eat there out there. So there's a little known eatery out there. So if you come to Bombay and you enjoy good food and seeing Dalal Street, do pay a visit there.
All right, thank you very much. Thank you so much for your time and thank you so much for sharing what lovely insights. You know,
it's always a pleasure, Nikunj, to be with you. Thank you so much and good luck on your new show.
All right, don't see quality at any price is a myth, and talking about how you're buying a piece of a business when you buy into a stock. That is Ramesh Damani for you.